Hey, what's up guys? John here. The rich are going to begin running from California due to what they're doing right now.
Taxing the richest of the rich. It's the latest proposal on the table of options lawmakers will consider this year to help close California's big budget hole.
California lost 27,000 tax filers who made over $200,000 back in 2020 and 2021.
This came out 45 minutes ago. Wall Street Journal, Yahoo News, MSNBC, Newsweek, they're all talking about this new wealth tax and what they're doing. Well, what they're going to be doing is an annual tax on the rich based on their assets, but more importantly, they are now weaponizing all attorneys in the state to where they can begin suing rich people, saying, you know what, I think you're underreporting your true net worth. We need to, bring in a forensic accountant and go through everything. Look at all your homes worldwide, look at all your assets, look at all your bank accounts, look at what your businesses are worth, and determine if you're underreporting. And this is what's going to happen. And if they are, then they're going to have to write a fat check to that attorney and the state of California. But this pales in comparison to all the changes that have been worked on the last 35 days. December 2nd, they reported something called, and now this is law, the California exit tax is a one-time tax that must be paid by businesses and individuals who relocate out of California. Reminds me of that movie, what was it, where he's like, now you can't leave, The Bronx Tale. Now you can't leave.
Now you just can't leave.
Right? That's what's happening. The tax is based on the value of the business or an individual's assets, including property, stocks, and other investments. So imagine, move to California, you build out a business. First couple of years, really tough. Almost go bankrupt a couple times, stack a ton of credit card debt. You're really depressed. Things aren't going the way you were anticipating. Then year 3, year 4, starting to really pick up. You're like, okay, great. This is actually starting to work out. Then boom, 10 years down, you're like, oh, this is awesome. Business is crushing it. We're making $1 million a year, $2 million a year, whatever the number may be. And then 2020 hits. And then you're looking around and you're like, hey, you know what? People are working remote now. All the restrictions in California, this is getting crazy. I don't want to be here. I want to relocate. I want to go to Texas. I want to go to Florida, Tennessee. 0% income tax. I'll hire my team remote. I'll reduce my expenses. I don't know what's going to happen in this economy. And we'll see where we're at then, right? And when you leave, you get a knock on the door a couple months later. And there's a business broker, California, saying, oh yeah, what was your EBITDA again last year? He's like, huh? What are you talking about? I left California. No. What was the EBITDA? Oh, okay. What were your expenses? All right. We think in today's market, this is valued at 7 times multiple. We think this business is worth $15 million. Okay. So why are you telling me? Oh, it's because you owe us $3 million or $4 million for having created the business in California. Sounds far-fetched. It's law. This is happening. But I'm going to show you why I believe this is going to be coming to many cities throughout the country. I'm talking Philadelphia, Boston, Atlanta, Chicago, you name it, Houston, Dallas. It's going to be coming to a lot of places. Why? Look at California, sitting on a $68 billion deficit, right? How did these states get funding? In large part through the commercial real estate taxes, residential real estate taxes, sales tax. They bring in all these taxes. But when you have a situation like what's happening right now with apartment buildings and commercial real estate office buildings, you're starting to see bigger discounts starting to get written in due to higher interest rates and higher vacancies, meaning when these deals are retrading, they're retrading in a lower tax base for these cities, meaning they're going to need to fill that gap. How are they going to fill the gap? Well, 45% of all tax revenue in California comes from the 1%. They're going to continue pursuing the 1%. I believe if you are someone that's in the 1% or you intend to be, nothing's going to be more valuable in 2024 and 2025 than a rock-solid accountant and a great business attorney that can advise you on, some of these changes. I'm going to break it down. I'm going to show you the facts, show you exactly what's going on. Please hit the like button. Hit the like button. YouTube will share this content, educate more people about what's going on in America. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. If you're thinking about taking advantage of this great wealth transfer, you're going to need great credit to get funding. Take a look at this. So, San Francisco, 1 out of 8 home sellers. 1 out of 8 home sellers in the city and peninsula area are enduring financial hits, with losses sometimes stretching into the hundreds of thousands. Look at this view, this property. Stunning, right? How much do you think that property sold for in 2020? Answer, $20 million. How much did it sell for in November of last year? 3 years later, sold for $9.9 million. The seller lost $11 million having purchased in San Francisco. You might say, you can't add, John. It's not 11, it's 10 million. You have 5% for realtor fees. That's 500 grand. You have taxes, insurance. I mean, you have all the expenses that you kind of piled in there, but most importantly, You have transfer taxes, you have escrow fees, you have whatever came up during inspections. You start to add all these, all these costs that, this home seller put in. They're lost 11, 12 million bucks probably being in San Francisco, maybe more, over that 3-year period. Like, it's been absolutely devastating what's happened to San Francisco property. But when you look at what they're doing here, look at this. This means plaintiffs' attorneys could sue affluent individuals on behalf of the state for allegedly underreporting assets. Plaintiff attorneys would be entitled to a share of the state's recovery. Think about this. If you're an attorney in the state of California and you hear this, what are you probably going to do if you have, you don't have any backbone and you're just basically an ambulance chaser? You're probably going to do two things. The first is you're going to probably go and look to outsource to hire a bunch of VAs. These VAs are going to start scrubbing social media profiles in a lot of the big cities. A lot of the big cities in California. And the ones where you are, you'll take these cases directly. The ones that you're not, you'll probably refer it out to outside counsel and get a piece of it. And you'll scrub these social media profiles looking for extravagant trips, private jets, second homes, third homes, looking for things that don't add up. And then you'd put these bogus claims, these bogus lawsuits, and see if the rich will just settle. And many times they will. They'll just settle. They'll say, you know what, I'll give you 200 grand to go away, 300 grand to go away, 400 grand to go away. Costs you basically nothing to file the claim, and then boom, you get a couple $100 grand. And when you're issuing these in mass quantity, the attorney's going to get rich. Second thing, probably post a lot of television ads and social media ads. Hey, do you know a tax cheat in California? Do you know someone that's not reporting their true value of their business, the true value of their assets? Do you know somebody that is living a really, really luxury lifestyle? You can refer them to us, and we will pay you for this introduction or for this lead. And you're going to start seeing a lot of people being a part of these. I'm telling you, you're going to start seeing a lot of ambulance chasers come out if they're incentivizing this type of behavior. Some people might say, hey, this is a good thing. We need to get money from the rich. We need to get money from California, for the rich to fund California. You have to realize you can't give the state of California enough money to solve its problems. If you gave them $1 trillion, their problems would be $2 trillion. California is broken. If you look at their policies and you look at what they're doing, and it's unfortunate. I love California. I moved there, 2006, and it was incredible. And unfortunately, I had to leave in 2021. And I intended never to leave California. But California, it's taken a turn for the worst, unfortunately. Now, California wealth tax arrives, but look at this. Look at this situation. And they've been pursuing business owners. They've been pursuing property owners. They're pursuing all the rich. They started this eviction moratorium March 1st, 2020, right? And it went on for 3 years. 3 years. And now for unpaid rent. So the landlord cannot seek eviction for non-payment of rent for the following dates: August 1st, 2023, for unpaid rent owed from March 1st to September, March of 2020 to September of 2021, or February 1, 2024, for unpaid rent owed. Like, it's absolutely crazy. They're trying to destroy wealth. Why? Well, you have to ask yourself, why would they do it? Because when they destroy the wealth and they push down the wealth, what ultimately happens? More dependence. People are going to want help. And then the state says, hey, we could help. We're the big daddy. We'll step in. We'll step in here and supply a solution for you guys. And then that's what's happening. The wealth is being pulled out of the state and it's being given to the state, right? The state is intentionally just empowering themselves, which is a sad situation. The state should be there as a referee to to the game, to the football game. They shouldn't be the one playing on the field. But that's what's happening in California. But they're doing it really strategically. Like, for example, they're increasing minimum wage for fast food workers and healthcare workers. Now, some people might say, this is a great thing. Look, I would agree. And I want to be very clear about this. I agree that if you're making 15, 20 bucks an hour in California, you're probably not surviving, right? I agree it's not a livable wage. But when they increase it $1, $2, $3, what does this ultimately do? It gives corporations a golden parachute. It gives them the perfect excuse to essentially take over market share. Because a lot of mom and pops are going to be going under. They're not going to be able to increase the minimum wage, and they're going to move into automation, right? So these large fast food chains are going to be able to integrate automation, invest in their businesses, take over market share, and they'll be able to undercut all their competition, right? They'll be able to offer these cheeseburgers for much less, and they will do that for probably a couple of years, 2-3 years. to blow out all their competitors. And then once that happens, then they can start jacking up prices once they own the market. They have a monopoly. So you look at what's happening in California, I believe it's a scheduled demolition. I believe it's a scheduled demolition. They're going after landlords, they're going after business owners, they're going after everybody. Whether you're an employee or an employer, you got to really be careful in the state of California. It's an unfortunate thing to say because I do love the state of California. Being very, very clear about that. I do love the state of California. I just don't love what they've done to it. What do you think about this entire situation? Drop below. Let's have a conversation about this. And if you're interested in fixing your credit to position yourself, what I believe is going to be the greatest transfer of assets in American history, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Catch you in the next one.